So today is 28th of March 2018. So we are just left with 3 more days before this financial year ends. But don't worry, it's never too late. We still have 3 more days to plan our tax affairs. But before you make any decision about the investment, where do you want to park your money, before that I would suggest you to look at your current investment and current expenditure before you decide where you want to invest your money. Thereafter, if some deductions are left, only then take a decision. So the first step is just look at your bank statement and credit card statement. They are basically 6 activities in respect of which if you have incurred some expenditure, then Income Tax Act would allow you lot of tax benefits. So what are those 6 activities? These 6 activities are these: Provident Fund, insurance premium, children education fees, housing loan EMIs, medical expenditure and donation. If you have incurred some expenditure on these 6 activities, then congratulations, you would get substantial tax savings from your tax bill. Income Tax Act gives you a lot of tax deductions which revolve around only these 6 deductions. So to start with, the most important and the most popular section is section 80C. Section 80C is the only section which allows you to choose from a lot of investment options available within an aggregate limit of 1.5 lakh. So out of this 1.5 lakh, you can invest this money to claim this deduction in lot of options, and these are your children education fees, your employee provident fund which your employee deducts from your salary, public provident fund, your housing loan EMI. The principal amount, the principal portion of your housing loan EMIs is eligible for 80C deductions. Then we have insurance policies, life insurance policies, both term and endowment insurance policies, they are eligible for 80C deductions. You can invest in a lot of annuity plans of insurance companies. You can invest in ELSS. You can invest in equity mutual funds. Last but not the least, you can also buy the bank FDs or post office FDs for minimum 5 years. So this is section 80C. This is investment related deductions. So during the year, if you have incurred some insurance policies, you have paid insurance premiums, you have paid education fees of your children, then just calculate the total amount you have invested and remove it from your 1.5 lakh rupees. Then the remaining amount is the total unclaimed deduction limit which you can still invest in next 3 days. Next 3 days, fortunately or unfortunately, is a long weekend. So you may not have all the options which I have just mentioned for investment through e-modes. Through net banking or through credit card, companies may or may not allow investment through that mode. So in that situation, you are left with one option. If you do not find any other best possible option, then pay advance EMI for your housing EMIs. So how it is going to benefit you? Section 80C is the only section which gives you deduction on payment basis. So if you pay your housing loan EMI in advance, you can still claim the deduction under section 80C. So in investment related deduction, we have another section 80CCD. This section is basically for NPS. So if you make investment in National Pension Scheme, you can claim an additional deduction of 50,000 rupees. So in aggregate, up to 2 lakh rupees deduction you can claim under section 80C and 80CCD. So the next one in the list is medical expenditure related deduction. So Income Tax Act gives you a lot of benefit relating to your medical insurance, critical illness, your disability, or if any of your dependent member is disabled. So the first one is section 80D. 80D is a deduction for medical insurance premium. This deduction is allowed for your family and for your parents. In Income Tax Act, your parents are treated differently from your parents. So your family includes yourself, your spouse, your children, and your parents includes your mom and your dad. For 80D, you can claim 2 deductions of 25,000 rupees each, one for your own family and one for your parents. If your family member and your your parents are senior citizens, means above 60 years of age, you can claim deduction of up to 60,000 rupees. So this is section 80D. Next section is section 80DD. If you have a dependent disabled family member who are dependent on you, then you can claim a deduction of up to 1.25 lakh rupees if your dependent family member is suffering from severe disability. Then we have another section 80DDB. This section gives you some tax benefit if you are looking after any of your family member who is going through a medical treatment for some critical illness like neurological diseases, like cancer, and there are some, it's a complete list of all the prescribed diseases for which you can claim the deduction of up to 60,000 rupees. The next section is 80U. This is for the taxpayer himself. If he is suffering from severe disability, you can simply claim a deduction of 1.25 lakh rupees flat. You just need a certificate from a medical practitioner which will certify the percentage of your disability. So now on basis of that certificate, you can simply claim a tax deduction of 1.25 lakh rupees. So we have covered the investment related deductions, medical expenditure related deductions, and the third one is housing loan EMIs. Housing loan EMIs, every EMI you pay every month, it has got two components. One is the principal part, next is the interest part. So the principal part is eligible for section 80C, which I just mentioned above, and the interest portion is eligible for deduction under section 24 up to 2 lakh rupees. If you are living in your own house for which you have taken a housing loan, so whatever interest you had paid during the year is eligible for deduction up to 2 lakh rupees. There is some tax benefit for the first time small home buyers. This section is section 80EE. So up to 50,000 rupees additional deduction is allowed to first time home buyer under section 80EE. So it means if you are eligible for section 80E, you can claim deduction of up to 2.5 lakh rupees in current year. Now the next one is donation rating deductions. There are a lot of sections, there are a lot of trust and government organization, government funds which would give you lot of deductions if you are making donations to them. So if there are certain government fund like Prime Minister National Relief Fund, Prime Minister Children Fund, Clean Ganga Fund, if you are making donation to these kind of fund, you are eligible to get the deduction of 100% of donation you had made during the year. But if you didn't pay any amount to them, but you are paying some donation to the trust or temple or churches, generally popular churches are eligible for both receiving the donation and giving you the deduction under section 80G. So if we are giving donation to the temple or trust or registered temple or registered trust, you can claim a deduction of 50% of the donation you have made to them. So now we have some other deductions as well. Section 80GG. So if you are living in a rented house but your employer is not paying you any HRA, or you are doing your own business and profession, so there is no point of getting an HRA, and you are living in a rented house. So section 80GG allows you to claim a deduction of 5,000 rupees per month, or in aggregate 60,000 rupees per annum. You can claim this deduction. Then we have 80TTA. This section is basically for getting deduction for small interest amount you earn in your saving bank deposit. So up to 10,000 rupees tax deduction you can claim in respect of your interest you have earned on interest on saving bank deposit. Mind it, this deduction is only for interest you earn from your saving bank deposit. It is not allowed for your fixed deposit interest. Then we have 80E. So 80E is basically a deduction which is allowed in respect of interest you pay for the education loan you have taken for your higher studies. So the entire interest amount is deductible. There is no limit. So these are all the deductions which we have covered so far. You may have some question in mind that I didn't declare or I could not declare these deductions to my employer. Then an employer has deducted some additional taxes from my salary. So what should I do? So in that situation, you don't need to worry. Simply claim these deductions in your ITR, which is going to happen next year from 1st April onwards. Then whatever taxes extra deducted from your salary will be refunded to you by income tax department after filing the income tax return. So this is all about the tax savings.